This is London with Bitcoin Spike and VIP Trader. We're going to go through the New York Open. We have some downside price action and bam, we are open on the specific daily on Tesla. Boom, right into the 20 moving average. We are down 2% on Tesla with orders immediately picking up on the 20 moving average. Bulls have tried to engage amidst this move to the downside. We'll look at NVDA very quickly. That's how quickly you have to react on the open. This is London, former hedge fund owner, private, non-SEC, not financial advice. In terms of the pickup attempt on NVIDIA, a bit more difficult. Primary line in question is going to be your green buy line on the specific weekly 20 moving average on NVIDIA. I want to encourage you today the following. As you look at pickups and drop-offs in the market, as you gauge between your long and your short interests, I want you to please attempt to do the following. If you're more geared towards longs, if you're more geared towards shorts, I want you to explore the other side of the market. And how could you do such? For instance, if you and your trade game is specifically made up of the following. And you know we like flash trades here. We like quick action right into on the daily. Let's look at Tesla. This specific hit, boom, boom. We can count it, guys. 0.83% knocked into a nice trade in the first literal minute of trade action. First few seconds of trade action on the open. It's why we like to trade. Bottom line, it's how we like to trade. And in terms of that, if it is something that pushes you guys, a bit too much, technically continue to watch, continue to understand the multi-time frame approach. The fact that you don't need to be responsible at all times for all the levels and all the indicators and all the lines. You don't. You need to be able to synthesize it and understand what is relevant immediately, okay? You need to be able to synthesize where price is and where do we have, if we have a confluence, any type of a crossover that we would look at in terms of our primary indicators, our specific trend lines in play, of course, our 20 moving average. There's a lot of moving averages, you know that. In terms of that, if you're into a different moving average set, no problem. I would just encourage you to explore the 20, for instance, that just paid on Tesla right on the open. Very nicely done. Let's look back at NVIDIA. And in terms of the attempt here, NVIDIA tough. I want to encourage you. This is part of this morning. We had noted that NVIDIA was in a bit of a compromised position. You know this. Bitcoin chart incoming as well, okay? Looking at the specifics here, we had noticed that NVIDIA was in a compromised position. Absolutely, without pouring, guys, what would we say? Pouring gasoline on the fire of any bears out there talking about things going down. Powell didn't try to really show up and help per se yesterday. A little bit of a gloom and doom story from the Fed in terms of not raising rates. That's fine, but a lot of couched language and a lot of just negativity kind of stemming from his specific speech. He didn't seem concerned about seeming negative, did he? Not at all. So that's to his credit. Let him do his job how he wants to do it. And in terms of the specifics, let's look at this specific pickup line, which is trying to be reinforced now. And as we start to spiral down, I'll just say this on NVIDIA, as we start to attempt to spiral down, meaning we're catching lower and lower specific trend lines on NVIDIA, it's just not a comfortable process to go through. The saving grace right now, as of right now, in a difficult specific pickup here on that weekly 20 moving average and the green buy line. Have to say the green buy line perfectly has matched up here. Okay, in terms of our fire and ice, yes, boom, direct on target hit, way to trade, nicely done. I was going to say the following when I started before we had some nice action in terms of your trades. Let's look at the market. If you find yourself a bull and you just can't figure out how to be a bear ever, if you're a bear and you just can't figure out how to be a bull ever, what would I like you to try and do as we look at the specifics on Bitcoin? Just to note this frustrating pattern. Remind yourselves of one thing on Bitcoin. I don't like bearish breakouts. This is the reason why you see multiple attempts by bulls to get up and over the specific rising wedge. Yes, not attempt one, attempt two. Here another frustrated attempt. These are difficult in terms of breakouts. The rising wedge is typically a bearish pattern. Now, paying attention to the 4 hourly, what was the gift that Bitcoin gave you? Literally just beautifully well scripted. Look at the candle set underneath that 20 moving average. Boom, nice done. What did you have before that if you wanted to carry an interest down, given some other accompanying patterns that we had? Well, you had a nice hit perfectly into your specific capital control line, RSI stochastic and MACD. That's the visualization on the chart for that exact precise entry. So given the 4-hourly time frame and those dynamics in play, I'm just not concerned about you or your trading. It's right in front of you. You had to not want the trade. That's the way that I put it. Now, if you find yourself operating in the market and you say, well, I'm just too much of a bull, I can't get my finger off the trigger on a long at every single level on the way down. Or, for instance, if you find yourself in the opposite side of the camp on in bear country, guys, on bear turf. I say, I just can't hit a long. I just am always geared into shorts, and I don't want to pick up a long. Whichever side you find yourself on, and please pay attention. If you could slow down a minute, even off of your charts, just pay attention for 1 second here. As you were to look at your involvement in the market, please try to attempt whichever side of the market you know that you're not operating on. And we want to shout out to Tony in Australia. What's up, Tony, my man? Australia in the house. What's going on? I'll put Aussie, my man. What's going on? Tony, nice to see you this morning. And we got Liam in the house as well. Liam in Scotland. What's going on, Liam? Nice to see both of you. Now, what I'm going to suggest that you do is at least evaluate your participation in the market, okay? Because we spoke about that, like how are you doing yesterday in the markets with your opens, etc. This was an open that the market just handed a very nice trade very early on. You say, well, it wasn't a huge move once the market opened, but it was a trade. We caught it immediately. If you didn't catch the beginning of the stream, watch the beginning of the stream. I'll keep this very short, this whole stream very short, all right, so that you can go back and just listen to the first and watch the first 5-10 seconds. You couldn't miss the trade. You just couldn't. If you were paying attention, you had to literally decide you didn't want the trade. That's very, very different than saying that, well, if you're in a boat and you just say, well, I just can't trade. Well, the boat is there. The boat is floating, guys. The boat is heading. It's en route. You're going to have to decide you want to literally just abandon ship on something that is just literally offering you the opportunity to trade. So now this is kind of the follow-up to that. In terms of the specifics, if you find yourself always on the short side, or if you find yourself always on the long side, I'd like you to think about, please consider, okay, doing the following. On, let's say, for instance, on NVDA, I want you to look at your higher time frames, if you can. Try and practice, let's say on the hourly would be a nice time frame as well. The hourly would be a nice time frame as well. You can do one of two things. If you find yourself and you just cannot catch a short, all right, you are in the market and you're constantly looking, let's say on NVIDIA or Bitcoin, you're constantly looking to the upside. You cannot, guys, go 5 feet literally in a room without thinking, where do I enter my next long? I have to enter my next long. If you're doing that and you haven't caught any shorts, okay, and you know that I'm talking to you if this is the instance for you, and there's the other camp that is just all they do is short. All they do is short. And what would the instance be? They short, and you couldn't get them to pick up a long to guys for anything. The whole notion would just be absurd. It's out of the realm of possibility that they would want to pick up on a weekly buy line. Just they're not going to do it, right? Just a built-in, a solid bear. What I'm going to say is the following: if you find yourself in bull country completely, right, and you cannot execute a short, please do the following. Make sure that you have some sort of a control line in play. Some sort, whether it's a cap line, whether or not it's a 20 moving average, okay, whether or not it's another moving average. You may say the 5 moving average, say the 4, the 9, the 18, the 21, guys, we go on and on, right? The 50, the 200, the 100. I want you to find that line. If you cannot book a short, I want you to find that line, find where you may have some interaction. For instance, a direct hit. Our capital control line is an excellent line to hit, all right? The capital control line here, boom, right? That's RSI stochastic and MACD. Find the specific indication it being red, all right? Meaning what, guys? Meaning bears are in charge, okay? We have some bearish sentiment here. This is on the weekly. Force yourself to enter a specific order. Now, on the weekly, this exercise may take too long, but if you cannot enter into a short, you just find that you can't book a short, I want you to get in on a specific time frame, and until you book a short, until you can book one, find your capital control line, enter into, or guys, do it on the 20 moving average. Literally on the 20 moving average. Look at the 20 engage here on NVIDIA, on this hourly. Force yourself to enter into and book a short. You don't have to hold it for a day. You don't have to hold it the entirety of, guys, of the expression of a trade day here. Or you don't have to hold it like one of the more successful trades here on NVIDIA came from our cap line, right? Our cap line. You don't have to hold it, for instance, from the initiation of the short here on and check this out, this is important, but what's really important is what I'm discussing with you, okay? If you're battling NVIDIA this whole time, now there are tons of flash trades. This morning is a flash trade. This morning is an excellent opportunity if you're geared towards hitting into the market, you know this, tons of flash trades. And while you can sit and say, well, each into his own, I'm more comfortable with longs only. I'm more comfortable with shorts only. 15%, 14 to 15% is 14 to 15%. If you're uncomfortable completely, and that's after we initiated the specific short signal on NVIDIA. Now, of course, it's kept running, as has the specific signal on NVIDIA. Tons of action in here, particularly on the lower time frames. Tons of action here. You know this, the 4 hourly though. Looking at this, I just want you to go through the process, okay? First of all, the beginning of the stream was phenomenal. Boom, right into, and if you want a flash trade, you're in, you're out, bam. Book that trade, nicely done. Please review such if you didn't catch it this morning. If, and to the extent that, and let's see what Shorty BTC and NVIDIA has paid me well lately. Great stuff, London, boom, way to go. And Venus in the house. Venus, nice to see you, good morning. Hey, feels like a Friday. I don't know why. It seems like Powell took the steam out of everything. Doesn't it? It seems like he just threw us like we're ready for a weekend. We had to sit through some Powell replay. That's okay. I won't disparage him at all. He has a tough job. The market's supposed to like him to an extent. Then he kind of needs to let the air out of the market a little bit. Now, in terms of this, I just want you to explore one thing. Okay, don't go back and count, well, this one would work, this one would have worked, this one would have worked. Don't do that to yourself. If you're deficient on a side of the market, all right? If you're deficient on a side of the market, meaning you're deficient on the long side of the market or you're deficient on the short side of the market, okay? I want you to force yourself to go through and enter a trade. If you don't like shorts, force yourself to go in and enter a short. That's it, period. Force yourself to do it until you book a trade. I don't care if you keep it for 10 minutes or 10 hours or 10 days or whatever it is, force yourself to book a short, okay? Force yourself to go through the process of saying, okay, so I need to find a line, I need to find some level of interaction here on the chart. Okay, let's just say I'm gonna go ahead and do this. I hate shorting, I'm gonna go ahead and do this, but let's say I wanna find a level of interaction. Let's just say, okay, fine. I'm gonna just stick with the 20 moving average. And let's just say you dig into it and you say, okay, fine, on the hourly, fine. I'll put an order here. I'll pay attention to the market. I'll put an alert on. I'll literally on the 20 moving average, I'll just enter into a short here. Fine, I'll go ahead and I'll do it. I'll make myself do it. If you have to trade or want to trade flash trades along the way that are long, fine, no problem, okay, no problem. While you're making the evaluation, please look at the technical expressions, and you may see them differently if you're in a short and you never short. If you are in a short and you're never in a short, you may find that your technical analysis completely changes. Because the bull who only longs, listen up, the bull who only longs is constantly finding a way or a reason for the market to go up. That's it. The bull who only longs is constantly looking for a reason for the market to go up, okay? Most of the time, completely dismissing, it's kind of like the 2%, it's like a 2% rule for just a maniacal bull, is really you give about a 2% consideration that you're gonna be wrong, or a 2% consideration to really profiting from a specific short. And that's about how much mental space it occupies for someone who's just continually looking up. Now, there are ways to trade if you are oriented long. That's it, okay? There are ways to hit and flash in and along. But if you can't carry down any kind of a short in the market, I just want to encourage you, and particularly those who are trading, you know why I'm mentioning this. You can look at this chart right here, and you know exactly on NVIDIA, you know exactly why I'm saying this, right? Without a doubt. You can backtest this visually here, and you know exactly, literally why this is being said, right? To the extent that you find yourself, literally that's price action, guys. That's our capital control line. That is not the price line, but you see color-coded a little bit of a profit equation, quite a bit of a profit equation here on the 4 hourly for NVIDIA. So to the extent that you find yourself frustrated and excluded, you feel like you're excluded from a part of the market, I just want you, this is the wake-up call for this morning, post-Powell. Force yourself to operate at some time, at some level on the other side of the market. And what is that going to give you? It's going to give you a different perspective, okay? As I try and provide somewhat of a balanced technical perspective for the bulls and bears, I'll tell you, if someone's locked into a short, it's that 2% rule. I'm telling you guys, if they're locked into a short and they never long, they're listening to about 2% of what they really don't want to hear, and barely even at that. It's everything geared down, 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 right? Anyone who is in a long, and just so understand, anyone who's in a long that I'm giving some sort of a caution or some sort of a warning, right? Delicately or indelicately put, some sort of a delicate or otherwise warning, and they're in a long, they are going to listen to what? About 2% of really what they should be listening to in terms of those technicals that should be and are in play. So what you will get out of being in a short, okay, or being in a long, if it is against your MO, your modus operandi, right? If it's against the way that you interact with the market, it's against kind of guys your profile engagement with whatever asset you're dealing with. What that will give you, aside from the profit on the trade, is the ability to reframe, okay, when you're always typically, let's say 98% of the time you're typically bullish, or 98% of the time you're typically bearish, okay, or overly bullish or overly bearish. What is it going to give you to be on the opposite side of the spectrum? It's going to give you, all of a sudden you're going to be in a short. You're never in a short, but now you're in a short. And all of a sudden you're going to start seeing the markets from a completely different angle, because you want price to go down. So whereas you have been accustomed to only hearing, right, and dealing with, let's say, a 2% small fraction of the information technically, and processing it potentially to your advantage, or most likely to your disadvantage, guys. When you flip the script, you're going to find yourself on the opposite end of the spectrum. And the goal in this is not to flip to the other side and become so one-sided. However, to appreciate your involvement in the market so that you can evenly balance, okay? So that you can evenly balance, and let's say not just throw caution to the wind. Even when you were to see a primary time frame such as the 4 hourly, okay? And an expression of, let's say, the RSI, stochastic, and MACD continually here on NVIDIA, let's at least put you in the, I would not be doing you or me a favor were I to continue to, and I do this, and you know I do this as someone who brings you technicals, as we're looking at, an open to the downside. Essentially, we had a nice trade, and that daily, you would say, well, I don't like flash trades. What'd you get this morning? First few minutes, flash trade. What are we pushing along now? The 20 moving average on the daily. You don't have to take the 0.8. You can say, well, I don't like to trade like that. Well, if you want to trade the open on Tesla, and if we didn't, let's say if we didn't dig into the specific yesterday, that specific capital control line, this is what paid. Boom. Beautifully well done. In terms of this entry, you're not going to hit it if you don't try, okay? Is it a trade? Yes. Did you want it? You had to say you didn't want it here. Now, would you carry it through this? Different questions start to arise to the extent that we noted a gap fill underneath. Would there be a rationale for keeping this trade open on the 4 hourly on Tesla? Listen, guys, we got the capital control line red. And I'm not telling you like, well, you should have, but I didn't tell you, so I don't really care that you did or not. No, I don't want to direct your trades fully as a group and have a point and shoot club. It's not what I'm interested in. I want you to be developed and be able to literally maintain a conversation technically with anybody, anywhere. Over and above them, much preferred. At any level of professional engagement in the market. Capiche? Absolutely. That's my goal. All right. As we look at this, digesting the information, yes, this was, and we agree, a trade. Would you have held overnight? Maybe not. Okay, maybe not. Maybe that's too much. Maybe you don't want to shoot for a gap fill. Maybe that's a completely different opportunity for you to engage in, just like I talked about. Let's just say, just like we just spoke about in terms of operating on the other side of the market. Yeah, okay. Forcing yourself to do that. Maybe this is another level of operation that you will get to, even when you, even when you decide to eliminate this, just this distraction that you're having in the market. And I'll just call it a distraction, not an inability to operate per se, but more of at least a distraction wherein you're filling yourself only with this one-sided approach in the market. So start small, always, no problem. In terms of if you're always long, force yourself, and guys, do it on Bitcoin, without a doubt. Force yourself, for instance, on Bitcoin. It just jumps out at me. This is just a nice, really nice move, particularly given our strategy. And again, you may be in the following, okay? If you find yourself still riddled by the same question here, essentially what I like to say, and you know this, it's not a question of whether or not you will make money. It's just a question of how much. Now, when I say that, what am I referring to? Participation with maximum probabilities, yes. But I would tell you, on the huge grand scope of things, what can we do in a market? Anything with expressed volatility. This is the macro of Bitcoin, and it makes the point well. I will just tell you, there are ways to structure in cash with extremely limited amounts of money to the upside and compounded cash to the downside. You can call it a dollar cost average, but you can get more extreme than that in terms of really, really severely looking at some compounded. We would really make this, let's really make this example something else here. Okay, this is the macro of Bitcoin. If you were to expose your capital, something along the lines of this in the market, and just you'd have to have some volatility factors. You'd have to be assured of what? Essentially that the market wouldn't go to zero, right? We can't deal with a Luna, something along the lines of such. We can't deal with such, right? But if you're to structure in your capital something along the lines of this, in terms of heavy compounding to the downside, as long as you're dealing with something with volatility, and particularly as you get into any expectation of a return feature, this equation is going to make you some money. Okay, it's just going to make you some money. Now, the heavier that you expose your capital to the downside in such an equation, and the higher you get, essentially, it could be the lower amount of your capital involvement. What I'm going to say is the following, and I haven't drawn this perfectly, but what we would be aiming for here is the notion that it's not a matter of if you're going to make money. It's just a matter of how much. Your level of exposure generally in the market is going to dictate guys, your level of exposure in terms of your risk is going to be correlated oftentimes with that profit equation. People want more profit, they oftentimes engage in more risk. Bottom line, if you will, guys, spend some additional time on that. We'll spend some additional time on that to the extent necessary, but you understand what I'm saying. If you're looking at a pattern that trades 75 to 80% of the time directionally, you're going to get into a profit equation even with those specific patterns, without a doubt. Even within those specific patterns, there's going to be value below. If you participate only at the high end and you refuse to participate at the lower end in the value zone, right? Is it guaranteed that you'll make money? No. That's not the point of the discussion, right? If you will reasonably participate, and just looking at Bitcoin here, but if you will reasonably participate in the value equation, right? Then, and really the more reasonable you become in terms of that participation, or the more conservative you become in terms of that participation, at 80% over time, it becomes nearly impossible not to make any money. That's just the fact. As you really begin to gear down, work into de-risking, like a complete de-risk on the market in line with the last 40 years of probabilities on patterns that you specifically target and engage in, a complete de-risking. Okay, you can achieve that. You'll achieve a profit, okay? But it just may not be, the essence of this discussion is what? It's not about whether or not you'll make money. It's a question of how much. Okay, the more proficient that you find yourself in, let's say the more proficient, let's say a skill set that you're able to define yourself within the market, the higher the volume of trades is the number one thing that I see that correlates you with your ability to profit in the market. The volume of trades. How many trades have you engaged in? Those of you who have engaged in a ton of trades, let's rewind as we're looking about, let's see, about 25 minutes into today's specific session. Let's look at the pickup now on Tesla that we started with. It's pushing now below, okay, the specific 20 moving average. This was a nice hit early on. If you didn't catch that right out of the starting gate, go catch it. This is an interesting push here on the daily. Just a lot of pressure from Powell, without a doubt. So the encouragement today, and I know a lot of you are participating on the short end of the spectrum here. Some of you aren't. To the extent that you're not excited today about a drop in the market, I just wanted to encourage you. Okay, first and foremost, I wanted to encourage you. Yesterday it was, how are you doing, right? Today, I just want to encourage you to take inventory as to whether or not you're balanced in the market. If you're always long versus always short, and you're never long versus or you're never short, just start to work into the equation. Force yourself to do the opposite, and don't do this. Please don't do this as we talk about this challenge. It'll be great. We'll let you guys go a little bit early here, just because I mean, we can walk through some price action as we see this gap nearly getting filled here on Tesla. And what was that? That was a target. Nicely done. What did we hit again? Specific capital control line. Red on the 4 hourly, nicely engaged and profit quite well. I don't want people to sit there and not have participated in anything to the downside or feel like they've missed every short. And I know that that's probably no one in this group, but to the extent, and I was going to say, to the extent that you find yourself missing out on that other side of the equation, don't do this. Okay, do not do this as the rectifying force here, or the corrective force here, as you go through this agenda or this routine. Please do not say, okay, fine. London says if I never short, I have to short. All right, great. I see where price is right now. I'm just going to short. That's not the answer. That's not the solution. All right, fine. You just imagine. Oh, okay, fine. I get it. That may be why you don't short. By the way, that could be the premier issue as to why you don't short. You may be comfortable with a level of exposure covering a long, and you may say, well, if it doesn't go my way, I'm just going to double, triple down. Hey, I'll double, triple down at the next level of exposure. No worries. Okay? If you're gunslinging like that in the market, please pay attention, huh? And this would be an area to gunsling into heavily here, right? On support of that 4 hourly on Tesla. But the notion is the following. If you're going to engage in a short, where do you want it to be? Where do you want the short to be? You want it to be higher, okay? You want it to be higher. You need to find your short opportunity or entry even relatively higher, all right? Don't sit and just, guys, don't gunsling into your new answer in the market, or how you're going to change your involvement in the market and say, well, now I'm in a short. That can be constructive. To the extent, it can be constructive to the extent you don't even know what it feels like to be in a short or to be in a long, or maybe you're in 99% longs and you know how to short and you just refuse to do it. It can be constructive because you can then start to appreciate the technicals from, let's say, another viewpoint. You can start to appreciate the fact, okay, well, what are my hurdles to the downside? Right. You can start to appreciate what it doesn't just feel like to just hold on to a long or to increase exposure along the way down. So that it may not be as eloquently put, but I want you to please try and reinforce that level of understanding, okay? Your participation in the market. It's really critically important, and I really wanted to bring that to your attention. That's just it. And I know maybe it doesn't apply to anybody here, but make sure that as you're trying to come up with a solution as to how you can participate, because it's no fun if you're waking up and everything's 2 to 3% down. And well, man, I've been long for weeks, I've been long for 4 or 5 weeks now, and it's just another down day in the market, right? And it's a different question, and particularly Bitcoin brought this into scope today. I did, because we were in the back, and Bitcoin clearly clearly set a candle underneath. I like that clear candle set underneath the 20 moving average with a move, boom, to the downside, straight to the target, like very nicely done. And it just really hit me this morning. If you're not participating in any shorts, you're missing, I always like to say you're missing half the market, and you may be missing more than just half the market. Why would that be? Critical question right now on the daily would be the specific cap line and 20 moving average in play. We had some flat bottom supports or flat top resistances, prior flat top resistances to be concerned about in this zone. Let's talk about what I did bring to you guys. Particularly, was it the, what was it, guys? The 30-minute looked like we were nearly in a descending triangle on Bitcoin, very much so. And looking at this, depending upon USDT, USD, etc., a near flat bottom support here. We had flirted with a few of these along the way in terms of flat bottoms. We finally got a break to the downside. So from a value consideration long, I'm excited. Congratulations if you're picking up what you wanted to pick up lower at specific levels, whether or not you were Fibonacci retracement, whether or not you're fire and ice. I know the green buy line did engage. You can structure into this with low amounts of, in terms of your orders, in terms of low amounts of risk, and participate in the market and enjoy the volatility, no problem. All right, to the extent, however, that you're just not participating, I just wanted to, that was just heavy on my mind this morning, guys, because a drop is a drop. It's an opportunity to catch the drop. And there's the let's say there always is the other side of the equation. On a day like today, if Powell just, kicked the market to the curb yesterday a little bit, wind out of the sails at least. I want you to reinforce where you're at, not only evaluate where you're at, but I do want you to be able to participate in these moves. It's just hugely important. So that's my kind of encouragement to you as you look at the market today. Exactly what it has brought in the form of an opportunity. I just want you to reinforce that. Make sure, I've talked about it enough this morning, just make sure. And while we have a nice short on the map, if you are in a short, if you're in a short and your last 5 or 6 successful trades have been all shorts, well, I would encourage you, of course, to flip the script and go long. Where do you want to go long from? Lower. Where do you want to go short from? Higher. Don't get trigger happy and decide to point and shoot and be like, well, I'm never in a short, I'm just going to get in one now. That's not the approach. So I encourage you all to do that. Looks like on NVDA, we'll do a little bit of a market recap. To me, what was the most important thing in the morning? You guys know, the literal first 5 seconds of the market. Boom, boom. That's it. Love it. What's my specific style? It's not your specific style. Okay, maximum amount of cash exposure, right, for me, with as tight of a stop loss as possible, with as highly precise of an entry, you got it, for as short amount of time as is possible, and for as high of a return. Those are the variables that go into the equation for me, okay? I want the short, I may have repeated that, I want it, guys, a short duration, high frequency, meaning I don't want it to last very long. I want it highly precise. I want a lot of capital, and I want a real limited level of risk on the trade, okay? So a lot of cash, exactly at a target level with limited risk for as much money as quickly as possible. You get that? I want it to move heavy, with heavy amounts of cash. I want to have limited risk. I want to get in and out, and that's it, bam. That's what I want my day to look like, okay? And if it can look like that, if I have volatility opportunities like that throughout the day, fantastic. But when do those opportunities arise? They arise on open. Sometimes we'll get an event, we'll get a specific economic data release, right? So you all may be swing trader kings, you guys. You may be along and a lot of you are. You just love swing trading. It's like, I like the flow. I need the flow. You'll need that action, right? The ability to kind of let it flow throughout the day. Looking at this specific, this is mirrored on Bitcoin and Tesla right now, this capitulation through this level of support. And what did we have? We did have the specific question in mind. Do you remember what the question is? You look at this chart here. What was the question the whole time? Okay, the question the whole time is, are we going to get back to and through, really now at this point we're to and through this specific, there we go. If we were to look at it, we can draw this up if we need to, okay? We were looking at an inverse head and shoulders. Recall? You got it. Was it 4 or 5 days ago? It's going to take a minute, right? Trying to push up in terms of this, where we're order stacked. You know this. So you could remain a bull on the drop and say, well, I have my orders placed here. A lot of you do. I have my orders placed here on the preceding neckline. So it's not all for naught if you are a bull this morning, like, no, I'm picking up. I've had this order here on Tesla literally for, guys, over 10 days. You would have had this order on Tesla literally over 10 days. And that's not a long time to have an order waiting, let's say 12 days. But we covered this as a specific, and we know this every time when you achieve that breakout, right? The number one, let's just say this, the next thing on your mind needs to be, you guys got this, where are the orders stacked below? Breakout, everyone's looking up. Everyone wants to enter here. And you know this, we talk about it all the time, and you got it down now. But notice it takes like 12 days to work out, right? And in that 12 days, it's like, well, even the, let's just say the trader wants, we want an immediate gratification, don't we? So yes, orders are stacked here, and we're ready for that immediate gratification. The moment is here. We've hit our specific, our orders have engaged, right? So you wait 12 days. The moment is here. We finally hit that neckline. Left shoulder, head, right shoulder. Then where are we at? Well, I've been waiting for 12 days. All of a sudden you want things to speed up, right? Sometimes you'll get lucky. Sometimes the market will accommodate whatever you want. Other times you're going to have to be very accommodating to the market. You know that. So we've got some mixed variables in play, but this is worth mentioning, right? As we see what Powell did with the market. Very, very reasonable to anticipate that we would have some potential volatility to this specific level here with Powell. Wouldn't you say? The breakout here, which we achieved on that 4 hourly, if you'll recall that on Tesla, nice moment, huh? Nice moment technically, really to walk through. Remember we reached that 50%. I think we drew this in the back, 50% of on the lines on the 4 hourly of the cup and handle. And that was more of a conservative reading, right? More of a conservative reading. And what's in play here on the 4 hourly? You've got downside targets here, right? With that reinforcement, the downside target being the bottom side band. And we did close yesterday, didn't we? We closed right underneath that 20 moving average, which had frustrated and pushed in and along before. So it was a bit murky in terms of let's say that back testing. So as we looked at the 50% completion, just register this 50% maximum probability. You guys got that. In terms of the level that we hit, absolutely, we would say, we would have said then, I think very reasonably, well, you know, Powell could probably, what would be the factors or variables that could push this back to a neckline instead of us just screaming up through the stratosphere here? We would put on the table, it's possible, yeah, absolutely. It's a possibility to entertain as to how your orders at this level could get picked up. I think we concur. Now, with this said on Tesla, we have additional levels, right? We have additional levels at 253 is a level of interest. And as we were to delve in further, as we get into this murky water, as we get into something that divides our attention in terms of us wanting to be directional and accurate immediately and knowing, you can say right here, your order picked up, right? Yes, your order at the neckline picked up. Yes, for money, correct? Yes. And you start to say, but I want to know, is it going to continue to go up? Now you're into the question of how much, right? Your order picked up, you've had it there for 12 days, and you're in the specific, you're in that zone again that we frequently refer to. It's a question of how much, right? Absolutely. So talking about this 12 days ago, just let those orders get into your books. Let it get onto your system, guys, in terms of that. Let's talk about what the next thing would be. What's the next thing that I like to do? After, let's just say a good talk here for our group, as we were to discuss, when you get into the feeling of the following, you get into the feeling of, okay, I understand the technicals, I understand we have a pickup, and I'm looking at how to participate with the market, right? I want to make some money. That's the point you're going to get to, and I need to figure out more about this equation than just general principles. What is, after let's say you've looked at, let's say on NVDA, you've looked at, and you may have a trade now, right? Still short, fine. Let's say that you are assessing and wanting to go to the next level of assessment in the market. What's your next step right now? Your number one next step right now. Okay, we'll say we took a look at Fibonacci's. We took a look at macros. We understand the general principles. We're back at a level right now on at least Tesla that we looked at 12 days ago, that we knew on breakout while everyone's becoming rash and wildly bullish, we know on any breakout that we are scheduled here below. It's engaged for profit. What do we want to look at now? What's the number one thing that I'm interested in? Well, I would say in line with, do we have targets to the upside or targets to the downside? That would be the first level of consideration. Do we have targets to the upside, targets to the downside, and in combination with what? I want to find expanding volatility. I want to find a level of established expanding volatility to know where I want to position additional positions. Okay, so if we have 12 days, assuming you didn't short on this, if you caught the short yesterday, I'm thrilled for you. You had to not want it. Okay, in terms of even participating a bit, you may have decided to release it, but it was staring you right in the face. It was a position that you had to literally decide, I don't want this short. I don't want it. Let everybody else have it. I don't want it at all. I don't even want to put an order in here. I don't. I'm going to refuse to put an order in here. I don't want it. If you decided that, no problem. If you decided that, maybe give it a go. Maybe give it a try, because it doesn't do any good to be down 2% on NVIDIA and Tesla today and get rocked to the downside, and you to have looked at a trade and for whatever reason say, no, I just don't want that. I don't want that short. Why? Just, guys, force yourself to engage in a short at a specific target level. Just force yourself to do it. Do it with $1. Do it with a quarter. Learn to stack quarters into $1. And yes, if you're stacking $250,000 into $1 million, you know exactly what I'm saying. You know exactly what I'm saying, without a doubt. Now, in terms of do we have targets to the upside, targets to the downside? Okay, anytime that you're caught in this, kind of in this specific mix, looking at what is this, Bitcoin on where are we at, 4-hourly green buy line. All right, fire nice. Nicely done. As you're looking at and pushing a bit, rough, but again, you had to decide you didn't want this, and you may have legitimately based upon what you were looking at. But let's reframe into the discussion. Let's finish this out. As you get into your trade game, your trade day, and begin to decide, well, I need more out of the market. I want more of an answer. Okay, this is fine. Generally, pattern recognition, fine. Probabilities, fine. What's the first? I want you to look at whether or not you have targets to the upside, targets to the downside. Included in that is a gap fill potential. Gap fill potential along with what? Do I have any flat bottom supports below me? Do I have any flat top resistances above me? Period. Are there any flat bottom supports above me? You got it. Are there any flat top resistances below me? Are there any established levels of demand interest above me that might want to get revisited? I want to know this as I'm marking out a target, okay? And this discussion, and this is the NVIDIA chart. Let's look at in NVIDIA, you're seeing this is just a chart of Bitcoin on the daily. I believe that's the daily cap line, also the green buy line. But as I were to look at NVIDIA that's on the hourly. Let's go to the 4-hourly. Let's see how we're laid out here. Targets to the upside versus targets to the downside. I'm interested in, yes, do we have a flat top support above, right? Do we have, and we have a return to expectation there. Do we have any flat top resistances, okay, that are below? Okay, that's part of the question, and in line therewith, and just nearly literally at the same time, assessing, do we have any expanding volatility? I want to know. Seeing a big overperformance on this specific level here, on that specific patterning that we brought into the equation, although on a different time frame, differentiated time frame. Let's look at this. So also targets to the upside, targets to the downside. These are tough. Aren't they tough? You got it, because this is not really so you're seeing, let's get into a three-part consideration. Once you're wanting a little bit more on the market, and this could go in terms of your specific, this could go in with your evaluation of patterning, okay? If you want to throw this in with your patterning, even better. Typically, when you look at a pattern, you're going to say, okay, this pattern is got the particular probability of going up or down and a probability there within of going, let's say, half the way up, right? Say we got a 60% chance of going up, 65% chance, not enough really for us, to go up. But then if we go up, I have like maybe an 80% chance of going to the 50% completion, right? So if we do break out, I've got an 80% chance of going to a 50% completion, whatever pattern that is. In the context of your pattern evaluation, you can throw this together, but as I get into targets, and you can have this discussion earlier with yourself. Do we have any targets? If you are sophisticated enough and already know the answer to that question, great. Okay? If you're there and it's all part of the same immediate discussion you have with yourself in the market, fantastic. But when you start to look for additional answers and you're like, okay, it's decision time. Right now it's decision time. And this discussion may feel like it does not even apply. It just may feel like it doesn't even apply. You're on NVIDIA. You're rolling to the downside. You caught nearly the literal top of NVIDIA. I'm telling you, you literally traded according to the 4-hour capital control line. You're literally up about 15%, and this is easy. You got in at 487, boom, we turned red, no problem. 487. I mean, what was the top was 502. Yeah, so, all right. You got in at 487 based on a signal, just boom. Why? Because RSI, stochastic, and MACD went bearish. So this may seem like it doesn't apply. There are a host of ways to look at this market and to interact with it. I just want to encourage you, as you were to look at really solidly participating with the market, that issues like targets, okay, need to help determine or eliminate any level of confusion that you may have. Okay, if you're stressed out about something, you need to know, well, if I'm stressed out about it or I really want to go up, like a hope and a prayer, right? You really want to go up. Well, do you have any targets to the upside? Period. Because at least at that point you have a 65, 67%, depending upon the specific patterning in play, of a return to function. At least give yourself that. At least give yourself the ability to operate in that 60, 65% mildly probable, right? Do you have targets to the upside? What patterns are in play? What, as you talk about a fractional completion, right? What patterns are in play to where you are, let's say, still fighting the probabilities as you're trying to hit your target? And I always say, first we need a target, then we need a pattern to get to our target. So and this really is appropriate as you look at the specific market dynamics in play right now, okay? With an open, right? With a bit of a frustrated hit along in this 20 moving average on the daily, which engaged. It was a beautiful day for bulls. For bears, yes, be carrying that short. But for bulls, what'd you wake up? You woke up and in 10 seconds, man, you had a nice long, you just cranked and hammered into it. We caught it live. Again, you're delayed. If you're counting on this to trade with, you're sunk. All right, you need to have these screens up. But I tell you, if you're a bull today, you love life, man. It was perfect, huh? You literally just woke up and in 8 seconds, you couldn't have missed this. Guys, impossible to miss this move straight on into the daily 20 moving average, like impossible to miss it. Just boom, boom, money. If you're a bull, hey, time to go. I'm gonna go hit the gym. I'm gonna go relax. I'm gonna go, go swim. Cool, ideally, right? Probably take a while to get to that level of proficiency where, again, you can involve heavier amounts of cash, okay? Let's just say based upon the levels of success that I've seen, okay? Based upon the levels of success that I've seen. You guys remember, not financial advice, not SEC, all that good stuff. In terms of what I've seen be extremely successful, and the guys who can just rock and roll and go lift and go surf and go whatever it is, I won't say there's a price to pay, but in terms of the development of the skill set, just to look at this on the daily and Tesla opens in up at the 20 moving average, it is pushed now quite a bit well. But looking at capturing this, percentage gain to the upside is a 1% move. Boom, how long did it take us? A minute, 10 seconds, 20 seconds. It was an easy trade for the bulls. You're not gonna look at the market and say, well, it was an easy day for the bulls. It was an easy day for the bulls. It was an easy open for the bulls. One of the easiest days we've had in a long time. You guys feel that? Did you see that? If you didn't rewatch, if you weren't here immediately for the stream open, This was an easy day for the bulls. How cool, huh? But when you get into this flux, let's say you're staring at a doji on the daily, trying to hold a 20 moving average. When you're staring and you're in that flux, what do you need to do? Answer. Do you have a target to the upside? Do you have a target to the downside? You may have a target to the top side and downside. This is Bitcoin we're looking at. Okay? What are your fractional completions? All of that I'm going to subsume in. Let's group all that into your pattern. And I'll go through this again so that we have a really clear framework. But I just don't know how advanced each and every one of you are. I don't know how much time you spent with Encyclopedia of Chart Patterns. Tom Bukowski, I don't know. Right? Hours or days or like weeks. If you spent weeks with Encyclopedia of Chart Patterns, man, you got it. I guarantee you got it. Period. Period. It's not the genie in the bottle, but this discussion, if you have read through, and particularly that in New York Institute of Finance, if you've read through that information, you're cool. You get this. So let's group, for those who get it, and you do, let's group the pattern discussion, okay, into, along with fractional completions, into, and what do you see here in terms of fractional completions? Well, we see these green lines drawn over to the left here, kind of demand zones, prior pivot action, right? And my settings right here aren't ideal on my specific indicator that we've got going on, but I can adjust that to the extent necessary, but it's doing fine. The issue is, what do I want to find? I want to find expanding volatility. I want to dig in and I want to find some degree of expanding volatility. If I'm looking for a reason for this thing to go up, I want expanding volatility. You know this. Why? Because of the probabilities. And leave it to me to potentially just run through some, guys, if it's running through any degree of information that seems overly complicated, that's okay. That's okay. Because I want this, period. And I want to be able to identify that in like 2 seconds, in like not seconds. Literally just, boom, I get it. I don't have to draw it. I know it's there. I see it. I'll draw it. We'll talk about it. That's what I want, period. Not just on Bitcoin. I want that expanding volatility function and profit equation on anything that I trade. What does this do for me? This provides me with a literal, and you may get into something that's collapsing and be like, this asset is not doing well. You may have an extraordinary pressure on RSI, stochastic MACD. It may invalidate this pattern not just once, but 20 times over. It would be unlikely. It would be unlikely, and we'd have to note such as to whether or not we would want to trade such. Okay? To the extent that these are invalidated, we literally, continually, we would have to note such as a literal aberration in the market. A literal departure from the last 40 plus years of market. Guys, synthesized market data. So if something continually refuses to trade, we'll take what busted 2 of these in a row, man. Okay, no problem. It busted 2 of them in a row, man. We're still going to be on the hunt for them. If it busts 6 or 7 or 8 of these in a row, that is a red flag. Okay? That's a red flag. It's not comporting with the last 40 plus years of market dynamics. Right? Is it anyone's fault? Is it the asset's fault? Is it the market maker's fault? Hey guys, it's not going to be your fault. Okay? So as you look at participating, the number one thing I want to find is this. It's what I want to find. Also, therein, I want to evaluate this in the context. Now, why is this? Because it's expanding volatility. I always want to be a part of expanding volatility. Where? To the downside. Where does that position me in terms of a risk, in terms of exposure? I want to be on this maximized descending level of support. Yes, I want to be lower for entries on longs. What does that do to your participation in the market? It schedules you down into here. Now, you may have been scheduled into lower pricing at some point in terms of your participation in the market. You may be scheduled in on Fibonacci's or otherwise, right? You may have a habit here of scheduling into lower levels, getting your pivots to the left as demand level entries, right? You may have a whole host of let's say, tactics to involve yourself at lower pricing, fine. But even now, as we would look at a standard Fibonacci on the 38.2 here on Bitcoin, what kind of seems like it did a little bit better? Expanding volatility, right? It did. Because that specific Fibonacci level, that 38.2, the 26,534, what was it beaten by? It was. Did you park orders here? Did you look for expanding volatility? Boom, 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 boom. Now we have expanding support and resistance. You got it. Okay? Volatility interaction between the buyers on support, sellers on resistance. So this is a clear-cut, nice example of how this pattern has beaten the specific Fibonacci's. I'll throw Fibonacci's up in the back when there's literally just it's kind of like an old reminder to an old friend, hey, high five on the way out, cool. Nice playing hoops with you today, boom, no problem. Assuming it's well in the toolkit, assuming it's well in the, you guys got it in the trade bag in terms of what you're looking at, right? It's a high five on the way out of the gym, nice playing hoops with you. Okay, this equation, this specific patterning, I so do not mind if it is unpopular and something that's not all over every TA billboard that you see. Hide it in the bushes, hide it in the far off trees, take it somewhere where no good idea will be found. It's fine, that's fine. Let's just advertise this all over every billboard. You could, it's 40 years of market information, but the fact that it is not a popularized, you guys, you have the information, you have the empirical data, so to sit and say that it's the proper approach, it's beyond a discussion of persuasion. It is a reinforceable fact, period. It is a reinforceable, objective fact, and you know this. Doesn't that make this a nice discussion? Without a doubt. So, as we look at, again, perfect open for who? For the bulls. Yeah, if you're carrying in a short, congratulations. But in terms of a flash trade day, nice in, out, boom, boom on Tesla. Nailed it. Beautiful, beautifully well done, guys. Beautifully well done. We've gapped down, as noted. We have a target to the downside, gap fill, noted. We're going to do that. Let's look on the 4-hourly. Let's look on the 4-hourly in terms of the expression. We've come down not to this specific, and this hides behind. We have a little bit of a lower level at 249, 250 is on the map. In addition, let me clean up this chart real quickly just to look at. And again, I went through some, because this was a nice entry on a short. Yes, compromised by a preceding hit at the 20 moving average on Tesla. But when I see a perfect short like this, that literally within, a number of hours, right? Within, you got a number of hours here, say 20 hours, and it just nails it through the floor at 7%. That's a nice move. With risk in the equation. To the extent that that's not part of your risk profile, the hit at the 20 on the daily on open in the first 10 seconds, beautifully well done. As you assess your involvement in the market, pay attention to volatility, okay? That's why we trade Bitcoin. We know this. It's why we literally trade Bitcoin. So if we're not bringing up and focusing on the highest level of probabilities here, as would belong to that field of, let's just say that component, and the said component being volatility, and I don't know what we're doing. If we are hunting something to trade and we found it and it's highly volatile, yes, it's highly volatile, Bitcoin. If we are not paying attention to the maximum probability tied into the reason we're involved in trading the asset, right? The maximum probability, the maximum expression of volatility on said volatility, then I don't know what we're doing. I don't know what anyone would be doing. Honestly, if they were to say, well, we're going to trade Bitcoin because we like the volatility, or trade Tesla because we like the volatility, but then they're not hammered into 40 plus years of market data, empirical market data, wherein they're going to participate in line with a maximized level of probability as it pertains to that volatility. And we're not going to be known for that. We're going to focus on the maximum level of probability okay, in line with and directed at central focus on that key core component that for which reason we are trading that asset. And all the other guys, all the other Showtime style or distractions, just say generally other components need to take a little bit of a backseat on that in terms of our rationale. So, and with that said, it's always I don't even want to couch it. You have to read the the book cover to cover. Well, it's only part of the story. Like, no, we're involved in it because of volatility. Yes. So what's the number one probability directionally that I can look at in profit equation that I can look at for anything that's highly volatile? We got it. Okay. So in terms of this specific move, let's look at the NASDAQ. Let's look at the NASDAQ. This is nice. Good morning. Hope you're all doing really well. Good morning. Good morning. The NASDAQ had what? Let's take a look at her. We had the specific and maybe a great trade opportunity. Let's take a look. Now, the reason that the reason that I'm encouraging and nearly forcing you to operate on the other side of the fence in terms of if you're never short, go short, all right? The reason that I'm also bringing up issues like today and letting you know it's an exciting day for the bulls who didn't want to carry in yesterday. It just wasn't worth the stress overnight. I wanted to sleep well, right? Do my TA, relax, have a movie on in the background, do whatever, nice dinner, and hey, right? You don't want to stress out through anything. Why would I focus on flash trades? Why would I focus on more money going into a trade, potentially, as you decide? More money going into a trade for shorter amounts of time for a higher return with a tighter stop. So you can get in and nail it like today, and you don't have to look at a drag of a day, a 2.5% down on Tesla, 1.19% down on NVDA, and be drugged through hours of the wrong side, right? Well, I missed this, I missed that. No, this was a hot trade. Boom, boom. You caught that? If you didn't watch the beginning of, and I'm just going to refer this to, again, rewatch the very beginning of the stream. So we focus on this so you will be proficient in it, so you won't feel like disaster has struck the market, my heart has sunk, I have a knot in my gut, I need to go hit a punching bag, everything's down 2.3%. No. Boom, boom. Heavy-handed, nicely rewarded, beautiful trade this morning for who? For bulls. Well, but look at this, man. For bulls, you got it. Man, who does that? That would be us, right? You got it. If you're not there yet, you can get there, but you need to start really trying to get there. Even on a smaller scale. Learn to stack quarters before you guys into a dollar before you stack anything bigger. And if you're stacking $250,000 into $1 million, and yes, how are you this morning? Right? If you're stacking $250,000 into the $1 million, there's more. Bigger levels of involvement. I promise on that. You think you made it stacking $250,000? I promise there are bigger levels than that. And good morning. Yes. So we got guys stacking quarters. There are guys stacking $250,000, and each is operating the same type of challenge, right on. And for everything in between, that's the challenge we know as the market. It's fantastic. So yes, beautiful day for the bulls. If you're carrying a short, congratulations. If you wanted to accept that risk on your profits or a newly entered position, cool. All right. But yes, dynamic, immediate flash trade. It is worth discussing in the context of the overall kind of thematics and tactics that we are engaged in. Yes, the weekly, as we were to look at the weekly on Tesla, anticipated action. We would anticipate contact with that 20 moving average given a red cap line, right? We will agree to the extent of about a 68, 75, depending upon time frame, up to a 70, 75 really, depending upon if you're on an off time frame. But about 70% of the time, we're going to contact this pink line with this RSI stochastic and MACD. It's a function of bearish control, essentially. Is it required? No, it's not. It is not required, but you're looking at like 70. I shared some of these percentages with you all, right? It's a high percentage of the time. And notice that this 20 moving average can move up. Absolutely, it can jaunt up and meet you, so it's not always a guaranteed short opportunity. Again, where do we short? We want to short from up above, we want to long from below. So just a little encouragement as we look at a level on, let's say, Tesla, come back into in that main question again, when you're on breakout, and everyone's looking up, train yourself on the 5 minute, on the 3 minute, on the 1 minute, train on the 30 second of it. Guys, if you can train on the 5 second, force yourself, win. And instead of clicking long here, you want to position before here. Absolutely. We're looking at the hourly on Tesla. You want to position before here, ideally. If you're clicking in long here, how many times are you beaten by someone with a pre-existing long? Every time. Every single time you are beaten by someone who already is carrying in a long. You guys know that. Great traders. I am certain of that. So anything that is said today, no way is it meant as a difficulty in any way. It's only meant in terms of inspiring and trying to allow you to participate more efficiently and more effectively in the markets. That's it, right? We want to participate more efficiently and effectively in the markets. Let's go ahead and measure this since it's on the map. Let's take a look at, as we dig into the details just a bit more. And again, that expanding volatility. If you're not hunting that, you should be. Get to know those. I tell you, my best friends in the world, the people that I care about more than anything that are in the markets, I tell them trade 500 of those. And some of them listen and some of them don't. And the ones that trade 500 of them, man, it's like they read the end of the book. I'm telling you, it's like they read the end of the book. And they know. And they will start to tell you, and you're like, hey, now they read the end of the book. They know how the book ends. Otherwise, guys, it's going to be a foreign, long, a little discussion that we would have. It's not going to resonate. Meaning foreign, it's just not going to resonate. If you will trade 500 of, where's our expansion here? And before we look at that specific there, if you will trade, you guys got it. Trade 500 of these. Trade 500 of these. And I will see the look on your face that you traded them, and it will be like you read the back of the book and you get it. Of the market. You'll get it. Looking at the specifics here on, that was on Bitcoin. And until you've traded 500 of them, you're not going to understand any valid critique or how they even operate, really. You realize how quickly you can trade 500 of those? Try and do it in a few weeks. I bet you could do it in a week. I bet you could do it in a week on the 1 second or 5 second time frame. I bet you could. I really bet you could. On the 1 second time frame or 5 second time frame, I bet you could do it in a week. Trade 500 of them. Read the back of the book. Trade 500 of them. In terms of the specifics on the daily flat bottom support, okay, this was and is a nice trade opportunity, without a doubt. We discussed it beforehand and are looking at a potential market topping event temporarily. We also talked about the possibility this could turn into a bull flag. All types of trade ops come into play here. We talked about the specific, particularly that specific line across the top. Let's re-engage on the NASDAQ. Is it perfect? Not really. Is it all bull? However, is it all bull? No, we don't want to be beyond this specific level. Generally, same thing on NVDA. We just generally don't want to participate. It's like, I will tell you as a trader, this, you're not going to want to just hammer into, you see this, the primary bull trend, and it's like you're not just going to start hammering into this specific level in here. You're just not on longs typically. Now, do you have a reinforceable level of support here? You got it, without a doubt. I mean, common sense is going to come into the equation quickly. Oh, we got a reinforceable level of support here. Okay, that's a possibility. Anytime you see this, what's the next level of consideration? Well, we also, I suppose, would have a bit of a potential for a bull flag. Hey, now you've got another level of support below. There we go. And in all theoretical possibility, we would start to look at, what do we look at? Not only a previous pivot pickup, okay, previous pivot pickup here, okay, And I suppose we still could have had, if you really were having you woke up and you had to be a bull, no matter what. Forget the Fed. I have to be a bull. Well, I guess you could have just really tried to hammer in like right here and had a technical partial return and have beaten. But yeah, absolutely. Technically speaking, it's like, well, I'm going to be a part of the bull crowd that's going to literally hammer into this level in case we have a partial return and a completion, boom, to the upside, right? So that's essentially what this looks like right now. With the levels of exposure included to what? Levels of exposure included into. Now, as you look at your partial completion, max probabilities, 50% here, what do you start to notice quickly? What do you notice here? Your ideal pickup line is here. I think we're going to agree. Your ideal pickup line is going to be here if we capitulate below this level of support on the triangulation. Yeah, we want a bull flag if we're going to capitulate. What's the requirement? This is where you start to look at your fractional completions. That 23.6 is going to need to hit. You got it. That 23.6 is going to need to hit. You got it. Now, what's going to be laid out, like we saw this morning, what's going to be laid out all throughout here? Let me put my New York Institute of Finance. Okay, New York Institute of Finance. I coded this out of their book. Where Wall Street goes to school, pay attention. Assuming it's going to load. Maybe it won't. There we go, it's going to load. Now, this is going to be all through this, and I don't have all of them selected, but as you were to look at the 3-minute, the 5-minute, the 15-minute, the 30-minute, the hourly, the 4-hourly, the 8-hourly, the daily, the month, the weekly, the monthly, right? Yes. All of these levels are going to be all throughout all of this. Our capital line exposure is going to be all throughout these lower levels. So to the extent that it is you feel like you're just flying blind here, it's part of the market is understanding that it's not an all-in, all-the-time endeavor. You know that. But with that said, and this morning was a great example as we see Tesla just hitching right here on our hourly, now that hourly buy line. And I was going through this discussion on Bitcoin to have a bit of and you're seeing Bitcoin pick up. This is actually the daily, right? That daily, no, this is, this is on the 4-hourly chart, but that's the daily. Let me go into this for Bitcoin real quickly. Looking at Bitcoin, the daily, yeah, that attempt to pick up on that cap line, right? So we have a long consideration in terms of the RSI, stochastic, and MACD. Yeah. What do we know about this line? It likes to get revisited. Likes to get revisited to test that support. So long likes to get revisited cap line. Okay, so and in the discussion of what would need to hold on the NASDAQ, I'm going through this not to tell you where the NASDAQ is going, but just to tell you in a split second, literally, as we can discuss through it, what the approach is going to be along the way that's going to determine whether or not we do catch here, right? Or whether or not we do catch here, or whether or not we do catch here on the NASDAQ, right? Here, or here, or here, right? The 23.6, 38.2, the 50, the 61.8, 786, the 86, the 1. So as you look at the host of potential answers here, you will have reinforceable levels at each of these, and not only at those levels of participation, but also within the dynamics of expanding volatility. It's the number one thing I want to focus on as we're attracted to anything with volatility. Just let that sink in. It's the number one thing I want to focus on. Our maximum probabilities tied in with the reason we're in the market, which is volatility. You know how frequently we want to get back to this line. How often does it happen? So what profit equation does that give you from this lower level of support back to this line? What does it mean about the necessary patterning for volatility? Are we happier with a line like this that's still descending, but not descending quite as much? Yes, we are. Why? Because a return to move. We're losing less. Our target to the upside is technically still higher. right? As you trade 500 of these, you're going to know. You already have. You know this. You know this. Preaching to the choir. You guys know that. So in the context of this determination, right? In the context of this determination, we have the framework to be able to approach the issue. Okay, let's decide for now, are we getting back to this level here? Now we're talking. Okay, if the magic in the equation is, these are good questions. If the magic in the equation is, okay, let's say I have a 70+% probability, high probability, getting back to that level of resistance based upon, let's say, the #1 performing pattern in the market. Okay, expanding, decreasing volatility. All right. If I have that probability of getting back to a level of resistance on the NASDAQ, what is my probability, or what is my means of getting back to, what is my means of getting back to this level of resistance? Because that seems to be kind of the key equation here. If the bears reinforce, and they have to at some point, price goes where? It goes up. And then where does it go, guys? It goes down. All right? If you're stuck in a camp of only liking when it goes up or only liking when it goes down, guys, it's got to go down at some point to go up. It's got to go up at some point to go down. It just does. That's the balance in the market. In terms of getting back to this level of resistance, we want to identify and spend time looking at anything that's going to get us back to this top level, and particularly up and out and over that top level. You got it. Where's our profit equation? When I say a profit equation, I'm assuming if you're long, it means entries lower, released higher. If you're short, I'm assuming it means entries higher and opportunity to release lower. Profit equation within bounds. One thing, just hammering into the scope here on the NASDAQ is, there we go. This is your profit equation with max probability on the 4-hourly. Let's switch over to the daily. Now, for those of you who have heard and have just done, who have literally said, okay, fine, you said trade 500 of them, I have. I've traded 500 of these. You know where you want this to go. You know, as a matter of fact, where you'd like this to go, and it's not popular. You're sitting on the bull side of the fence, is it? You know where you want this to go, ideally, but it's not a scare story. You know this, guys. It's not a scare story. It's not a gloom and doom and the Great Recession is here hey, guys, come on. The Great Recession or Great Depression, whatever. No, this is a profit equation. What do you have? We have an instance of expanding volatility. Where is your maximized entry on this? Where do you want to enter on this? If you were to trade one pattern here in the market, if you were inclined to be a part of trading an asset because of volatility, where do you want to trade this? You know ideally where you'd like to trade this. Where would your ideal entry be? Boom, 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 boom. Yes, indeed. We have a hit, resistance, support, resistance, support, resistance, hit 1, 2, 3, 4, 5, 2 on support, 3 on resistance. Who likes this pattern? Bulls. Big time, big time. Is it mitigated by the specific? Don't even talk about blackjack right now. A macro blackjack, don't even talk about it. Big time. Interested, bulls? You better believe it if we can get below where? I mean, this is exciting stuff. This is good stuff. Get me down here below a double bottom. We call it a blackjack. Why? Double bottom. Get me below this so I can hopefully grab a single pass through. So I can hopefully what? If you trade these, and you do, you know the magic in the action here is what? We have a double bottom, a single pass through, and let's get busy. Boom. Yeah, that's it, guys. Those they rock and roll. We are known for rock and rolling them. We like to trade them. Blackjack, double bottom, single pass through, return to. And this move is not required. It's not required, but we see it with a degree of frequency, particularly the return to move, the pullback, and they have a nice habit of. And you would say, well, at that point, really, at that point, you're just talking about a bull flag. That's it. You're just talking about a bull flag. Fair critique and commentary, depending upon the level of completion to target to the downside of a descending triangulation. Yeah, you are just talking about a specific bull flag. And I'm going to save the rest of that discussion for another time. Okay? Double bottom, single pass through would be beautiful. Be excellent trading opportunity. So we as bulls don't care about a gloom and doom story. We don't care at all about, well, the recession is incoming and the soft landing agenda. And, if you're going to get scared into picking up your long, you are not, guys, don't get scared into picking up a long. I don't know why it sells. You know this. It will sell. People will want to watch the doom and gloom. This is on NASDAQ. Why do you want to be scared into picking up a long? We're looking at an issue of expanding volatility with multiple levels that can engage prior thereto. We are looking forward to a profit equation. And anyone who's just talking gloom and doom and that's it, and down and down and down, and has no level, and that's where fire and ice comes in. Very much so. That's where fire and ice comes in. You've got levels of participation you literally just have to say no to. Nope, not going to do it. Right? I do not want that trade. It'll continually do that to you. Right? The weekly has hit. You just have to look at it. I do not want that trade. I do not want to make money. Just absolutely not. So I bring that up just in terms of guarding yourself. You have to do it on CNBC. You have to do it on Bloomberg more so. Okay? In terms of this fight or flight psychology that is you guys instituted into the market. It's weird. Borderline creepy, but it's definitely weird, right? Yes. So why would you want to be petrified and scared into picking up an ideal long? You can go that route if you want to, if you feel really compelled, right? I mean, come on. There's a better way to do that, guys. There's a better way to participate in the market. There just is. Than being scared the entire way down. And what happens when you surround yourself with this lack of real, with a lack of appreciation for the technicals in play and the maximum probabilities? I know that you will say, well, I was just too scared to. I was just too. Well, you've been watching literal Armageddon on TV, as much of it as you can de-dopamine or re-dopamine yourself into, right? Aside from pure technicals and probabilities. Yes. And you may have been refusing to participate in either a long or a short. And we have great traders on both sides of that equation. Ones that love to short, ones that love to long. It's not one person, people. It's the truth. Yes. And you may just find the market just doesn't like me long. I don't know why. How often are you hammering into your 4 hourly levels on fire and ice? How often? The market just doesn't want you to long, huh? It doesn't want you to. No, you said no to the 4 hourly on Bitcoin. You know this. It's not that you can't pick up a long on Bitcoin. It's that you have not set alerts on Bitcoin, that you decided not to participate continually, habitual offender on fire and ice. You may be. Yes, indeed. Right? You know, as a matter of fact, that these levels hit. And what does it mean to you, though? What, there's no skin off your back. You just are going to continually decide not to trade into a green byline on the 4 hourly. Why? Because you're so good at shorts. Have you realized that maybe you're really, really, really missing the ball there? I'm so good at shorts, I don't have to make money when it's alerting me to the fact that I can make money. Wow, you must be really good at shorts, huh? So good at shorts that you're bad at longs. Man, you got it, huh? Just consider that. Consider the opportunities if you're completely ignoring 4 hour fire and ice. I just am going to challenge you, if you're completely ignoring it on whichever side you find yourself. And it's tough. You have to, to the extent that it becomes a little tough, okay. Because you have to be prepared for a larger move. Yes. You have to do what, guys? You have to look at some sort of a target to the upside or downside. If you're getting a screaming golden short signal and you're at a target threshold or a level of resistance, you might want to pay attention. It's worth trying to short. It's worth trying to short. You don't have to, but it's worth a try. You don't have to do it on the macro like this, huh? 4 hourly. Nice line. Nice hit. You don't have to, but it's worth a try. All right? Now, if you're not shorting or you're not longing, you're just on one side of the equation, challenge yourself, at least on the specific. Why? Because our lines are too good. Our lines are too good. This is the daily cap line picking up now on Bitcoin. Quite a flex. Nice flex below and beyond. That's a normal retest of a cap line, period, on Bitcoin. That's on the daily chart. That's a normal retest, we have to say. We like the highly precise moves, without a doubt. That's a normal retest. In the context of your trade game, I just want to encourage you to look at the other side of the equation just a bit, right? As we hunt down these maximum probability moves, as we look at, and I just guys, reinforce your level of understanding in the markets. You owe that to yourself. Don't, as we get into this, because we've broken a primary trend line. So if people know what they're talking about, this is what it'll boil down to in the NASDAQ, okay? If people know what they're talking about and zoom in on this, zone in on this, okay? If they want to take advantage of you, if they want to take advantage of you and their audience on TV or otherwise, they'll shout doom and gloom here. They will get you ramped up. It's Armageddon time, right? Because we are in a descending triangle. There's a chance that they're going to be right and get this thing to pour down, and they'll be able to call the top, right? Hey, they'll be hero for a while. But the problem is you program yourself with that trash. You won't be focused into the bullish potential of this move. Now, as that narrative will gain steam, we have to understand what? And we appreciate the fact that this could fall through as a what? As a bump and run, an extended bump and run. And there's a profit equation, and we'll high five here, bam, on Fibonacci's. Yeah, there's a profit equation on in through a golden pocket, potentially below this level of support, even on through 786 or 86 in the form of a bump and run. You got it. But what is that? It's bullish. It's bullish. To the extent that you caught some of the bearish, let me see here. I want to throw the NASDAQ real quickly if you'll let me. We spent a little more time than we were going to spend, which is no problem. It's a good deal. Nice to talk in the morning. Looking at the NASDAQ, and I noted this last night. Where are we at? If you look at this chart, I just promise you, if you spend time with our group, it becomes literally, it doesn't become a brainless exercise. Right? But that's the NASDAQ, the daily NASDAQ chart. What just happened? Where were we? You could explain this to a high schooler and they would start to understand. What did we just hit? Where are we? Where were we at? Who just got paid? This was easy. This one is easy. It's not an Armageddon, right? It's not an Armageddon. It's not the system is on fire or collapsing. That's the easiest chart to look at on the planet, isn't it? Yeah. So, in the context thereof, as you add in additional parameters and functions to take advantage of and continue to forecast and participate, it's worth, and I saw this last night and worth bringing up, to the extent that it is meritorious to discuss if you're not shorting at all, to consider such, okay, to force yourself to engage in such a bit. If you're not longing at all, force yourself to engage in such a bit, such as that. However, I had just, pardon the near slip of the tongue faux pas. Let me find, that is NVIDIA NDX. Let me make sure that I'm back on. Let me get into, is that AMD? AMD just popped up. AMD tough, huh? A little bit tough. We won't spend time on AMD, but tough. No worries. Let's look at, let me make sure that I'm plugged back into BTC. I don't want to mess my charts up. Let's see where we're at, and boom. Now, so we have some pickups in the market. We have some discussion here. What's the number one question? Number one question, do we have targets to the upside or downside? Where's your expanding volatility? Yes. Do we have targets to the upside or downside? Before the drop on Bitcoin, did we have targets to the downside? Yeah. Without a doubt. We did, didn't we? Did we have a flat top resistance below us? You got it. What's about the chance of us recovering that? You guys know. Typical throwback, pullback probabilities are highly worth considering. I say we see it commonly in the market. We do. We see it commonly in the market. You're going to have to refuse to participate with them. We see it so commonly, you're going to have to not want the trades. And with that said, some trades aren't going to go your way. You know that. Some trades are not going to go your way, period. And they're not all supposed to go your way. New York Institute of Finance says, what is their key litmus test? About 40%? Futures trader needs to be successful about 40% of the time. We like to be successful about 75%, 80% of the time. The threshold of 100% of the time for a certain number of times, right? 4 in a row at least to start kind of feeling like you know what you're talking about in the market. You know what you're doing, right? Easy does it. Let's see what we got. So this is not a good place to be involved in price action. When you see a specific, it's just not if you're going to be bullish on something generally. Bitcoin can push and flip and pull around quite a bit underneath the level of support. But generally, as we look at the overall market, we're just not, if you participate in the market, and we didn't get back to this, we have a lot of charts going on, looking at head and shoulders, okay? Let's just go ahead and measure this. Either a measured move from a channel formation, that flag, right, or the head and shoulders on Tesla, which, by the way, had a perfect bullish open. Perfect bullish open. If you missed it, man, you missed it a lot. It was perfect. If you didn't hammer into that trade, man, you don't get them like that every day. Come on. Right on the daily 20 moving average. That was sweet. Sweet. Nice action. Nice action. We have to admit that, not bad, huh? Let's square this out. If you hold down your control key while you're drawing onto, let's say, a specific head and shoulders, it'll snap your lines to the grid. Hold down your control button. Anywhere that I go, it's going to snap it to the grid. It's going to snap it to the price line. Okay, so if we look at, let's just say the hourly. Okay, I want to measure the amplitude of the neckline, which is the line differentiating the two pivots on the shoulders. We have left shoulder, head, right shoulder, right? Amplitude, boom, straight up and down. Try and align this straight up and down. You don't have to be obsessive about it, but straight up and down, and then what? We want to draw this to the point of breakout here. Just pull it across. Boom. All right? We're hovering on that 50%. Okay? Max probability. Okay? Which is also confluent with the preceding neckline of, and it was a trade pattern that Trading View gave us. And I said, let's test it out. We got to, not exactly targets on it. We didn't get to targets on it. Be careful of those targets on Trading View Auto Draw. Not everything's going to go to the 100% or the most, it's just not, guys. You don't have to be overly cautious, but be aware of that fact. So looking at this inverse head and shoulders, we did note about 12 days ago on breakout where our orders stacked, where they just picked up today. Boom. Okay? Preceding neckline of the inverse head and shoulders, revisited today. And boom, nice hit, nice level of proficiency there. So to the extent that we are hovering now on a close for the hourly on the line chart of the 50% completion, on the wicks we got to the golden pocket, and we have a 251 downside target for a maximum completion. 251, near filling the gap at 249. So we have some eyes that are heading down. We just do in terms of targets to the downside, targets to the upside. And again, when we get back into this, well, we have targets up, we have targets down. Okay, when you get into that level of potential confusion, what do we look for? Look for volatility. Look for expanding volatility. What's the volatility equation between the bulls and the bulls and the bears? Easy enough, right? So I would like to say not exactly a perfect open, but nearly perfect. I really, really liked this open. And we decided to talk for a while because it's a good thing to sit and talk. We enjoy talking in the morning. If we could sit around a table and talk and trade and do stuff all together, that'd be fantastic. But we don't have that. We don't have that setup, huh? I'm not going to get you guys coffee, huh? You're not going to get me coffee either, huh? Give me another coffee, huh? Huh? What's that? It's just funny, huh? We can sit around and trade all day long. Hey, I need a coffee. Like, yeah, you need your own cup of coffee. Go get your own cup of coffee. It's funny. Potential level to beat here, and we started to try and lay these out. If we see these either trade or not, I'll leave you guys with a small micro bull flag on NVDA, right? I'll get you guys a cup of coffee if you need it. You see the cap line pick up, boom, boom. You see that hit in the cap line on the 1 minute? Micro, boom, boom. Micro frequency trades. So as we were to discuss macro, you understand with micro, the levels in play. Let's just leave it with this on NVIDIA 418. Okay, you want a 418 is going to be a level to beat. You have frustrations, you note them, and when you don't have them, to the left. What do you see here? We see a flat bottom here. That was recovered too. Bam, right? We have that curvature and handle. We have a potential for a move to the upside. We're going to measure, first of all, we've gone through the quick and easy, guys, the quick methodology for this. We're going to measure up if I see a 1.21%, just measuring low to high, I can project into the percentage gain above. Okay, it's going to be a little bit below that 1.21%, because the higher we are, the less the move means. So 1.21% does turn into 1.19%. So if I have about a point, I'm looking at a 0.5% move potential on this with some frustration, right? I know I'm going about a little over 1.21%, right? Take half of that, a 0.5, 0.6 on the move without getting too detailed into, well, now I wanted to measure into this 50% move, right? And we're going to need what? We're going to need some momentum to get us there. Momentum, it's an interesting little tool. Momentum, multi-time frame, MACD squeeze all in one, etc. Looking forward to the rest of the trade day. Let's get into it and let's get at it in terms of the framework. You guys let me know how you're doing. You guys let me know what you're focused on and what you're trading. And let's see what we got here. Top Notch London. Thanks, brother. Got the stream playing on the big screen. Good. Was able to pick up the BTC, do some TA whilst also turning into stream at the same. Good work. Good trading. Good trading. That's the way to do it. Big screen TV makes a big difference. Big screen TV. You got to have it, right? So I'm excited about you all developing proficiency on the open. We got the patterns down. You guys know what the pattern dynamics are. You know that. As you were to work into your probabilities on fractional completion, that's something more than just mildly important as well. As you are to look at integrating your cap line, primary tool, you know that, of all the tools, primary tool, maybe after Fire and Ice. Along with Fire and Ice, including divergences are nice if they're not too confusing along the way and you can manage them mentally. Just the flash trading on open, the more you get involved in flash trading, and guys, just quick, Jackie Chan hands, you got it. It is going to make your life a lot more interesting. I'm just going to tell you guys, you've probably already rewatched the beginning of the stream because it was a perfect open for who? Amidst all this on the screen, it was a perfect open for bulls. It was. We note such. Congratulations to anyone who caught a short on Tesla yesterday. Perfect laser guided precision entry. Nicely done. You could have been shopping for shorts, huh? Before Powell. On the instance that he could have really, he dived into the market a little harder than some people would have expected. Would be Powell for you, huh? What was the notion? I heard something new this morning, a take. First of all, Bloomberg has signed off. They are now critics of Powell. I don't think that they should be a fair weather fan. So anyway, Mike on Bloomberg, he's a little bit of a fair weather fan. So that's all right, Mike. But it was kind of beyond tongue in cheek, a little bit crass and unprofessional yesterday in terms of Bloomberg's questioning of Fed Chair Powell. I didn't like it. I didn't like the way Mike came off in terms of like, what are your forecasts even good for? He didn't need to throw that at Powell. Like, Mike, have you ever had a forecast? on Bloomberg ever, other than sit around and joke around on Bloomberg. You guys know they do this. They joke around and we don't even know why it's going in whatever direction it's going. Like, we don't need to hear that trash. Bottom line, looking at the topping formation on Tesla, aside from, and as a variable component of the head and shoulders, right? As a variable component of the pickup on preceding neckline, boom, okay? You can also look at this as a topping formation. So there are traders, and when there's a level of, guys, if there are multiple patterns in play, traders are trading them all. Is there an overriding concern or a right answer as you were to look at which specific pattern is going to govern? You're going to have traders who are more accustomed or attuned to trading topping formations. You're going to have traders who are more attuned and accustomed to, everything they look at is a head and shoulders. You just have traders who are just doing that consistently. So everything they look at is a head and shoulders everywhere. It's like, even in here, there's another head and shoulders. It's like, okay, man, you got it. There's a head. You're right. There's a head and shoulders there, and it did play out, boom, to the downside, right? It's the way that traders are geared to. They'll look at this head and shoulders here, left shoulder, head, and right shoulder right in here, and they won't look at the let's say that ascending triangle, right? So you'll have traders trading everything, and to the extent that in terms of this move here, we discussed the measured move to the downside from this ascending triangle. You'll just have traders on different patterns, and no problem. Don't let it over confuse you, or don't let it confuse you at all. Do let it be an instance where you recognize that there is a level of a lack of, let's just say there's a lack of, we don't want to say confirmation, but we can, as to the specific targets to the downside. When we get caught into, and there are sophisticated ways of measuring into multiple targets through calculations, and you could imagine, but there are simpler is often better, right? In terms of a highly calculative approach, you're not going to do much better than the cap line. Okay, you're just not going to do much better on the cap line, particularly as you were to look at the specific fire and ice. So you can have the discussion on cap line and fire ice in terms of precision, direction, etc. It's just hard. It's going to be hard for you to beat that, at least on trading view. And that'd be the bottom line. At least on trading view with your targets, it's going to be hard for you to beat those two components in terms of your precision, because there are inherent, literally the servers of trading view will not handle too much more. Okay, I promise. Calculatively, they will not handle too much more. You are at a near need of kind of supercomputing power, some additional computing power, some real power. So that should put you a bit at ease in terms of any differentiation you have on the patterning in play. So nice rehit on the specific preceding neckline on Tesla. Nice open yet again. Let's see what we've got, if anything, on NVIDIA to kind of close out on Tesla, because in NVIDIA we marked out the specific need to cross up and over the 418. You got that right, with about a 0.5 to a 1.2% potential to the upside, and it looks like we are real close on Tesla to doing just about the same thing. So seeing a confluence between Tesla and NVIDIA, right? And seeing this framework here, a little bit different, but you see the componentry in place here. Differentiated, if we were to call this a cup and handle, right? We would say an ascending triangle with a bit of a compromise. Just a slight compromise, not much. We're at the point of a breakout up and over, right? And on a breakout up and over of an ascending triangle, we are more than keenly aware of what? Of the fact that we do not want that breakout to push. We like a nice flat top resistance. Yes, we don't like it to push. If it pushes and starts to push just a little bit, you run into a completely different animal in terms of your probability of going up. You got it right. So it's important that at least somewhat consider and understand the dynamics in play as to why this is a great pattern to trade, if and to the extent we can get some real performance out of it on Tesla on the 3-minute right now. Quick and easy, what do I want to do? Quick and easy, if I'm looking at what my potential to the upside is, I'm going to take my price range tool. I want to know what the percentage is here, Boom, I'm done. 1.5%, so I know a full carry up is going to be a little bit less than that to a 100% target, right? Full carry up is going to be instead of 1.5, 1.48, right? It's going to be a little bit less. The further you go, the further higher you go on this, it's going to be less. The same amplitude going down is going to be more. See, 1.6%, it's going to be less, okay? That comes from the notion that $1 on $10 is more than $1 on $100, right? Same dollar, but it means more to $10 below than it does to $100 above. See, 1.55% is 1.47%, okay? $1 on $10 means more, it's 10%, than $1 on $100. It's the same dollar, right? 1% on $100, it's 10% on $10, okay? Same amount of movement, okay, is going to differentiate, obviously, guys, we don't need to go through that, but you got it. So the reinforceable level here we're seeing, if you've been trading on the micro on the 3-minute on Tesla, is the 20 moving average. You see that very clearly. So the quick and easy, again, to get into this, you identify the pattern. You may not even need to draw this, right? You know what's in play. To the extent you want a clean chart, no problem. But you know what that is. Maybe draw a quick line here, boom, flat top resistance, measure your amplitude. I just draw it here and I already know. We've got max about a little less than 1.5% to the upside on a completion of this specific pattern. I have just count a little less than half of that, 0.5, 0.7% to a 50% target. So my max probability on this is going to be half of my full completion, right? Fractional completion. So keep my tool handy here, hit. I've got 1.5%. I'm looking for like a 0.7% move just to free yourself up to potentially engage in some more direct interaction and more efficient interaction with the exchange, with your trade account, right? Okay. Now, in terms of, that's Tesla, 3-minute, and you understand the limiting factors. What's the limiting factor here? What do you see and you know is the limiting factor here? Without a doubt. You might say, fire and ice. True, fire and ice, but what else? You trade these enough, you know, you got a level of resistance. That specific carry-up line of resistance is the level to beat. In addition, what don't we necessarily like here? We're not crazy about the fact that we have pushed so far into the apex of this triangulation, right? We want to break out about 60, 70%, 3/4 is fine, right? Into the pattern dynamic, typically. So ready for some swing trades. Nice to have, again, a dynamic open, great open for who? For the bulls. No doom and gloom. No, what do we call it, guys? No Armageddon, huh? Don't go watch the Armageddon channels, guys. You're doing yourself such a disservice. Don't even put that on your social media profiles. Don't do it, guys. It's just miserable, huh? Don't like it. You're gonna miss your longs. You're gonna get scared into Armageddon. You're gonna miss your longs. I promise. Don't do it. I just promise to don't do it. I don't promise what you're gonna do. I just promise don't do it, okay? You can if you have to go the Armageddon route, but just, you know, you're better than that, guys. I promise you're better than that. So NVIDIA in this bit of a stalwart channel here. Potential for a pick up. Nice swing trades. Let's look at the amplitude. What is NVIDIA giving you on some fire and ice? 0.4. Okay. Did not achieve the breakout. Let's look at, where is NVIDIA on the hourly? Let's look at the hourly real quickly on NVIDIA. Pushing along an adjusted green byline here. This NVIDIA is tough right now. I know some of you have just been short the whole time. You're just loving life. That's great. Congratulations, huh? Congratulations. Nice move. What have we been on NVIDIA? Well, you know, a little bit of a difficult circumstance after. Come on, NVIDIA. Good swing trades, good cap trades. Good cap trades. Now, the next thing after you are, and pay attention, it's impossible to do this wrong. It's just a matter of acclimating and fine-tuning your experience into the market, okay? Just a matter of fine-tuning, okay? as you were to look at whether or not you're always short or always long, the next step is going to be assessing your level of participation while you're short versus while you're long. If you'll take the same signal and go heavier every time long than you will short every time, and there's never a short that catches your eye, where you would look at it and say, I would want to schedule in to, I really would want to schedule into a specific opportunity to go short or go long. I really see this as an opportunity on NVIDIA to potentially catch a short with a larger amount of capital, whatever that relatively may be for you. It could be 2 quarters. It could be $250,000. It could be literal 2 quarters, as you see fit, as you trade. But this could be an opportunity here on the weekly for a entry with great stop loss provided. Look at this, exact precision. So note, first of all, your level of balance in the market. Are you always long, always short? Or you have a good balance? Are you able to achieve a balance? If you're balanced, are you balanced in terms of the amount of your trades? And some of you can pick up on swing trades, long and short, at a equivalent level right now, and you're doing great, guys, just on swing trade. Some of these trades, I'm not going to do you any favors by just ignoring them and not trying to reinforce some better ways of participating in the market. I want you to target. I want you to become more precise. I want you to look at your participation and potential, not deficiencies, but it's a natural part of the progression in the market. It is a part of your progression in the market. And you'll look back on it and be like, hey, we got that down. Just like we've gotten everything else down. You guys know that. And it's been a great journey, been a lot of fun. And again, congrats to anyone who has held this 4-hourly RSI stochastic MACD just power slide on NVIDIA. Plenty of pickups, plenty of action, plenty of good stuff going on. You've got plenty of opportunity. You know, it's like, well, was it all down? No, it wasn't all down, you know. A little bit difficult in terms of these. Let's draw it to the lines on the hourly. Let's just do to the lines on the hourly and see how difficult it was if you were flash trading along the way here. Hourly on the lines. Some difficult levels. Perfect hit, golden pocket. Boom, boom. That was probably your best hit here. Golden pocket went for 3.87%. Noted. Nice hit into your 50%. Okay, 3%, about 2.9%. Noted. You're going to catch these on Fire and Ice. And again, Fire and Ice is calculated to catch the support lines and the resistance lines. So you can draw out your lines to that extent. Frustrated at the 23.6 and 38.2. Really got into the meat of it at the 50 golden pocket, and you had a nice hit here at the 86. Don't forget your 86. This played, boom, for 5%, almost 5%. So you had multiple 3%, 4%, 5% on the way down. So you can't just make it a story of waiting in a trade for a number of weeks here as we decided to go down. You can't. You've had opportunities. Those are some good moves. This is almost 3 weeks here. So as you look at that, hey, assess such. Bulls have done well in the meat of this zone, in around that 50%. And note the 50% golden pocket, and note that 86, boom, boom. A lot of people won't know what that hit, but yeah, take a look at the hourly, because it's a bit of a micro. These are a bit of micro moves, so hourly drawn to the lines, and they traded well. They did, they have, last number of days particularly. All right, so we'll let you guys go, and looking forward to another open tomorrow. To the extent that we can establish some expanding volatility right now on this NVIDIA 1 minute, hey, that would be nice. We can do that by breaking down out of a specific bull flag. Never overexpose. Look for that confirmation. Look for your consistency in the market. Again, I want you to assess, do you have targets to the upside? Any flat bottoms, right, that we have abandoned to the upside? Preceding demand interests. Will the market give on Bitcoin here? Anyone who entered at demand, they entered here at demand, right? On this line of demand, this flat bottom support. Will the market give them an opportunity to at least break even? Right? That's going to be the way that I'm going to look at this, and that we'll couch that as an objective of evaluating what we're participating in. Like, what's the degree of almost ultimate fairness here? Okay, say someone doesn't know a descending triangle here on the 77-minute, a clear pattern, right? Let's say someone just doesn't know and they decide not to trade the descending triangle. 77-minute was perfect, by the way. One of my favorite time frames. Let's say they didn't know that, and they just They saw demand coming in and decided to participate along this demand level. Is the market going to provide them with an opportunity to break even here, a break even pullback move? We see that with frequency, okay? A little bit complicated to the extent that we have some preceding levels of support and pivots in play. First of all, as a pickup nicely, preceding levels here could act as a reinforceable hurdle level of resistance, support flip to resistance. So we're going to pay attention to that. However, on the whole, we are going to definitely note any preceding levels of support to target. Bulls want to target this level at 26,900. You guys know that. So we'll dig into what is it again? The specific levels of volatility. What's just climbing up for no reason? If you're not involved in this move, it's like, man, if you don't trade these, you're not going to know. You're not going to know, why is this price just climbing up for no apparent reason? You notice, why does it just seems like it's just going up for no real reason? You couldn't make this out, guys. In terms of trying to capture this, if you're not aligned with the structural dynamics, it's not something, is that just going to jump out at you? Most likely not, right? Be aware of, particularly as you trade these, we are always aware of the specific dynamics in play that carry up level of support to resistance. Just be aware of the potential for a downside slide in the form of a channel. But that's our key consideration here. Where is our key entry? Not here at all. Where's our key entry? Always along the level of support. Boom. We call them rifle orders. If it rifles down, boom, to the level of support or below, we're prepared. It creates a value-driven dynamic for you to participate in the market, wanting to get in long, lower, right? Get in lower, guys, on your longs. Get in higher on your shorts. So we'll talk to you guys later. Thanks so much for being here. Hope you're doing well. And I look forward to seeing you guys in the back. Hopefully you'll throw some charts in the back. Maybe you'll throw some charts in the back. And that's about it, guys. We'll talk to you soon. Take care. This is London with Bitcoin Spike and VIP Trader.